The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke and Duke here in Philadelphia, Pennsylvania, being inundated by all of the people that are here for the Democratic Convention. We'd love to see all these folks visiting our fair city. And as you see it on TV, you'll see that big Wells Fargo building at 100 South Broad Street, and that is where they filmed the Duke and Duke offices. Okay, here's what we have going. The first chart that I posted in here is one we looked at yesterday. Apple. The earnings came out for Apple, and as you can see, we had a C formation coming up here near the 104 level. We're trading just a tad above 104 right now on the open. So we're going to gap up almost 8.5%, it looks like. In Apple, the way I would handle this is wait for the first hour. And if you're lower in the first hour than you were on the opening, then it would be a short sale with a stop about a $0.50 above the high of the day, whatever that happens to be at that point. But you've got to wait for the first hour of trading. You know, let amateur hour get out of the way, and then you can see which direction you think the market's going. But this is a perfect ABCD pattern. You can't ask for anything better than this. Actually, it's about as good as it's going to get. So you want to be able to pay close attention to it. Now, one of the things that we were watching yesterday that looks very interesting. In fact, what I did was I issued a buy signal in the gold yesterday as we switched over to December today. Actually, I think it's tomorrow, but everyone's trading December because it's got the largest number of contracts outstanding in open interest, well over 40-some thousand. But as you can see, we're going to switch here to silver first, and then we'll cover the gold. But the silver was the most interesting one because we had that high back on July the 3rd, the day we had that $23,000 move in one day up and down. Since that time, we were able to back off only to the 50% level of the low in June, and then also it almost made a 38% retracement of the low from May. So this was a very, very minor correction, and of course it backed off just a little bit, and so the risk at that point was very, very small. So we were looking at the Christmas gold around $13.25. With a stop of about $8. If you were in that trade, what I would be doing now is put your stop at break even and let it rip because it's moved $8 in our favor. And if that is a good trade, you want it to go to break even as opposed to risking it. The reason for that is if I leave the stop the same place, we've made $8. And if I keep the stop where it is and I have to give up $8, that means the risk on the trade is $16, and that's not very smart. So it's better to move to break even. You know, maybe you get knocked out, maybe you won't, but that's the way that you really want to handle it. That's the way it looks to me. Regarding the Canadian dollar trade that we looked at yesterday, when that Canadian dollar was up making a three-drive pattern, that's also moving nicely in a favor of around 50 pips. And I would do the same thing, is move your stop to break even, and that way you can protect yourself and you're in a free trade, and that's the ideal situation because you really don't have to risk it. Now, the other advice I'm going to give you, I know you're not going to take it, but that is don't watch it. Walk away and don't pay any attention to it. The reason is that the monitor is not your friend, folks. It really isn't. It's a mirror of all the things that are going on in your life. And you focus on the upticks when you're long, and you focus on the downticks when you're short. That's just the nature of the human being. They want to stay away from pain. So just keep in mind that looking at the monitor is not that good. The best thing to do is to put the trade on, turn the monitor off. You can leave your alert on because you want to know when prices hit certain levels. That's important, but you don't have to watch every tick. You know, that's really, the professionals are certainly not watching every tick. I can almost assure you of that, within reason, of course. Okay, the next question that someone brought to our attention today was the stock of Twitter. And if you'll give me a second here, I will get it up. I just had it prepared. Oh dear, there we go. We're right here. I had it right in front of me. All right, here's Twitter. We had some announcement here also, I guess, on earnings. As you can see, we went up and made a 78% retracement and a 1.27 expansion. When it got to 19, we're now trading right near the $16 a share level. It's down 10% pre-market, but this is one where you had, you know, two nice ratios coming together, and you were there for actually 8 days, you know, before the market, you know, really fell apart. And so that's another one that we had a request for, and so that's what I'm looking at. I'm not involved in it. I'm just saying that's what it looked like. I wouldn't have been long that stock no matter what because of the fact that it's at lower tops and two ratios. It would look like it would be ready to have a pretty good correction. And of course, a 10% correction in one day is certainly going to be a pretty good correction. I'm surprised it's not up a lot given the fact that there seems to be more Twitters and social networking going on because of the convention more than ever before. But since they do billions of these social networking things, you know, you don't know how many, you know, people are out there using that stuff. Folks, the only advice I could give you is if you're doing email or apps or social networkings, be really careful what you put in there because the whole world's going to have access to it. So, you know, we'll see. Just my little office here was hacked by a small group out of Ecuador. And, of course, they quickly moved over to Honduras. We were not able to catch them, but, you know, you just never know where they're moving around. So just be very careful what you put, what you say, and what you do, because with social networking, there is no privacy anymore. Edward Snowden, I guess, you know, blew the whistle on the CIA, and that has certainly, you know, made a big change in, you know, what the way people are looking at things. You have to be incredibly if they can, you know, hack the government and the banks and stuff, they can certainly, you know, hack you. And so just be really, really careful. That's the bottom line of, you know, what we're watching here as we're going through, you know, looking at some of these charts today. We have a request here, of course, to take a look at the Nasdaq because it is getting very close to making a new high here. I'll put this up so we can take a look at it. And as you can see, if we get to 47.30, it's about 22 points from where we're trading right now. We would be making a new high in the Nasdaq, and we're not even anywhere close to the New York Stock Exchange Index. We could be today, and but right now that's what it's looking at as far as a smaller amount. Now on Friday, we're going to have our good friend Bill Koval from WDK Analytics on, and we'll take a look at that. However, I wanted to start today with a couple of our charts from our good friend. First, Norm Winsky, we'll do him from Astro Trends, and we'll do the one from Shane Smolian. As you can see, this is Norman's planetary index, and as you can see, it is turning down, and he's looking for a low coming in here towards the end of the week when Uranus, just 2 more days, where Uranus goes.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, the next chart is the one that we talked about on Monday. This is from our friend Shane Smolian at wolftrader.net. As you can see, this is his Bradley model. He weights the inner planets a little bit differently than Bradley did, but he's done a lot of research, so you have to pay attention to what he's looking at. But you see here from July through October, looks like it could be a pretty nasty period, but the whole world wants to buy this stuff now, so probably the easiest thing to do is to wait for a break and then sell the the first rally back would be one way of looking at it. Now we might make new highs in the New York Stock Exchange Index today above 10,810. And we'll see if that's going to be able to do that. We've got the Dow up about 40 this morning, and the S&P, up about 5 or 6, but easily to start moving quickly after some of these things move. Now let's quickly shift over to the bond market. We talked about that yesterday because we went down and we'd made a perfect 61% retracement at the 70 level. As you can see, we went about 6 or 7 pips or ticks below that point. Then we backed off, and that gave us 2 areas. Yesterday we hit the perfect 382 level that we talked about, and I think the best way to do this is to move down to a just look at it over a shorter time period, and you'll see what's actually happening in the bonds, because this bond market really trades absolutely beautiful if you're looking at patterns and numbers, because as you can see, yesterday's low was exactly, in fact, we were actually talking about this, I believe, at that 171 level was perfect, and that sets up, and we're trading almost up to that old high now, up at 172.20 level. We get above that, then we're setting above, looking at that 174. And remember, We have a lot of stuff going on with the Fed today. We got a caller from Lost Wages. Larry, are you there?
I am. Hope you're well, Larry.
Still above ground, my friend. What can I do for you?
I have a fib question for you, but before I ask you, I came across a very interesting fact. The city of Terre Haute has been right every single time since 1888 on electing the president, except twice. And that's an incredible record, and I'm wondering who they're voting for this year.
Well, Larry, I can tell you this. My brother-in-law and my sister and my brother-in-law are there, and I've been involved with politics ever since I was a little shaver. You know, my dad was in part of the Democrat machine, but for the first time in the history of the world, my brother-in-law and my sister both are not voting for Mrs. Clinton. They're going to vote either independent or for Mr. Trump, but they certainly, they said that my sister actually called me on her birthday, which was July 19th, to tell me that. She said, I've got a great birthday present for you. But when I voted, Larry, I think I've told this story. I voted for the first time in this 1960 election with Kennedy, and my dad went in there and he said, pull the lever 7 times and then get out. And I swear to God, that's exactly what he told me. So I clicked it over to Nixon, pulled it 7 times, and then came back. And I never did tell him that, you know, I disqualified his vote. But he voted at 9 or 10 different polling places all over Vigo County. So it was so corrupt that it was just anyway. I'm sorry to bother you with that, but that's.
Oh, no. That sounds like Chicago. That sounds like Louisiana.
Oh yeah, it's exactly,
that sounds like a lot
exactly. I grew up with that stuff. I thought that was normal until I got out of college.
You know, Gans said time is the most important factor in determining market movements, and I wanted to ask you about using time with the fibs. And this is something that a lot of people don't talk about. They don't write about it. It's always the price movement. And do you use fib time?
No, I don't. I rely on one of my very dear friends out of the UK that has gone far, far better than I've ever attempted to do. I rely on what he's looking at. I rely on Norm Winsky. I rely on Bill Meridian, and I rely on Shane Smolian. Those are the three, you know, the major ones that I watch. And then, you know, if you put the time in, the problem is that you get too many ratios coming together. But if you get them to cluster, where you've got, you know, several 1.27s and 1.618s and 1.414s, that's really telling it that something really big is happening with the cycle. The problem that I've had, Larry, is that the bottoms are far easier than the tops. And I think greed is a little harder to measure than fear. That would be my guess, but that's how I try to do it.
Well, would you measure from a high to a low, from a low to a low, or
you have to do both, because when you're looking at a cycle, you're looking at highs and lows, and they expand and contract, and so you have to do all highs and lows. That leads to a chart that can be pretty cluttered. But if you cut down your ratios, in other words, only use 3 or 4, you know, set ratios, then you have a better idea of looking at, because everything we're doing here is probability. We never know for sure, you know, when the market is going to turn. But that's the way I try to approach it.
Oh, okay. Now,
I do some. I always watch the full moons and new moons, because, you know, they've been around forever and they've proved to the market that they work a lot of the time. So I watch those. But again, you know, the last 2 didn't work. You know, well, July 8th worked. Or July 5th worked okay, but the one on the 24th certainly didn't.
Yeah, but if they all worked, everybody'd be doing it. And then,
we wouldn't be on the air, would we?
That's right. That's right. Well, we're going to enjoy 112 degrees today. I hope you can too.
We are lucky. We got the monsoons coming in last night. We had a big rain here, so we're only going to be about 92 today. So it's cooling off. We were at 103 yesterday, but 103 for us is balmy. You know, it's a dry heat.
You are so lucky.
Yeah. I talked to Paula Douglas yesterday, and it was 119 in Palm Springs, so it's a little warmer over there.
That seems like a little warm to me, but
that's below sea level. See, once you get below sea level, the temperature rises, and we're at 2,000 feet here in Tucson, so it's a little different.
Yeah, we're 2,500 here, so we're about the same. Don't stop telling your stories, Larry. It makes trading and listening to your show so interesting.
Well, thanks a lot, Larry, because I was watching some of the convention stuff and I was thinking of these people that are on the air all day long and all the stuff that they have to do and how hard they have to work, to keep the interesting comments and stuff. And it's not an easy thing, especially when we're just looking at patterns. But the good part is I've been around a long time. I've met a lot of friends and stuff and have some pretty good stories along the way. But in fact, someone asked me last night who was the most interesting person I ever met in Drexel. Well, I would have to say it would be Bob Hope, because when he came in, it was like the place just stopped. I mean, and because he was so friendly and so nice and very, very cordial. He would take pictures with everybody, and he only came in 3 times, I think, during the 6 years I was there. But every time he did, it was like Santa had showed up, because his broker was a very good friend of his, and so that's really basically what we're looking at.
Well, he owned a lot of property in San Fernando Valley, north of
California. Oh boy, did he ever! Man,
yeah,
he certainly did. Sherman Oaks and Woodland Hills. Boy, he owned all those strip malls. We'll let you go, Larry. Thanks a lot.
Thank you, Larry. Bye.
You bet. Bye-bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got our friend Ed Carlson from the Market Technicians Association out of Seattle, Washington, as our guest this morning. Ed, thanks for joining us this early.
Hey, Dad, I'm awake.
Hey, this is good. This is good. Hey, listen, we've had a question. I posted into Tiger TV the part of your page 2 of your newsletter where you have this your sentiment and fear and greed index. You want to two questions that we've been asked to answer. One is this something that you've developed or is something that George Lindsay developed?
Oh, none of the above. I think you're referring to the CNN Fear and Greed Index. That's available.
Is that what that is? Okay, because
yeah.
I see it's in your letter. And did Lindsay cover things like fear and greed?
Sentiment? No, he was not involved with that.
Well, he was very popular. I don't know if you know this or not, but Arch Crawford lives here in Tucson, not too far. He lives about 2 miles away from me. And we've been friends for many years. And he actually was in New York, from 71 to 94, and he knew Lindsay quite well. They would go to meetings together and stuff. And Art says that he would go to a lot of the astrological meetings. He was, heavily involved with that at one time. Did you ever look at that or?
No, he never wrote anything about. You got to remember that what's left of Lindsay is few and far between. Finding out what he. For those who aren't up on this, Lindsay wrote a newsletter for over 30 years, but he never wrote a book. And so understanding Lindsay's approach for me was a case of finding these old newsletters that people had kept and piecing together, the things that he'd written over time to figure out his methods. He never sat down and just laid it all out like you would in a book because he never wrote a book. Very difficult. And if he ever wrote about astrological issues, I never found it.
Mm-hmm. Well, he was a regular about every 6 weeks or so. He was a regular on what was that guy's name every Friday? Oh, darn, I can't think of his. I just had it on the tip of my tongue, and I've lost it.
Are you talking about Rukeyser?
Yeah, Louis. He was on Louis Rukeyser's. Yeah, he would come on Louis, and he would give his ideas. He was always had these colorful ties and shirts and jackets. And that's what I remember from it. But he was very, very good at his timing. He would be within a day or two of some of these major points. And I remember he passed away on the top of the market on August the 25th, 1987. I remember when I read his obituary a few years later, that I saw that's when he passed away, which I thought was rather ironic.
Yeah.
Now you've written several books on this, haven't you?
3 books, yeah. The first is George Lindsay and the Art of Technical Analysis, and then it is interesting in that while I was writing that, I kept coming across references he made to a paper that he wrote in 1950 called An Aid to Timing, but I couldn't find it. And so I figured, well, I basically understand what he's talking about there. I'll just keep moving on. And it wasn't until after the first book was published that somebody sent me a copy of An Aid to Timing. And once I read that, I realized, oh boy, here's a whole, this is a Pandora's box. And so I decided, well, I'd like to publish this information. And I thought, given how difficult it was to find this, maybe I should just publish the thing intact, and I'll annotate it because it's very difficult to understand. And so that was my second book, An Aid to Timing. And once I finished that, then I realized, I need something to tie all this together. And then I put out the training course, George Lindsay training course.
Well, towards the end of the show here, we'll tell the folks how we can reach you and everything. But the question that we've had is, what was his basic methodology of trying to find these dates? Can you share a little bit of what it?
Yeah, what it was? I try not to overwhelm everyone because, frankly, it was fairly involved. He was all time though. He was truly a market timer, and had very little to do with price forecasting. He would start with what he called his long-term intervals. If he was trying to find a top, he would be looking for an interval of time, 15 years and 11 months from an important low. And he knew that within that time period, that 11-month time period, there would be a top show up. Or if he was looking for a low, he would look for a low at roughly 12 years and 2 months to 12 years and 8 months from an important high. Then he had what he called his standard time spans. And from what you and I would think of as cyclical highs and lows, he knew that, well, at least history had shown him that these highs and lows would show up within these certain time spans. That's all available on my website. I think I've got it posted there for anybody to look at. And then finally, in order to come up with a forecast, what I call a single date point forecast, and what made his work so fascinating to so many people was his use of what he called middle section forecasts. These were a little more involved than you want to get into on a radio show, but these were his forecasts that would enable him to come up with a single date forecast. And, you know, he might be off by a week sometimes, but for the most part, he was usually right on.
Mm-hmm. Well, these shorter term ones, were these like like a half span moving, a half span cycle or something like that?
Oh gosh, I'm not even sure what that is.
Were they? Because I looked at I have your books, and he never used. I mean, it was so different because he didn't use the traditional things, like Fibonacci or bands or Keltner bands or anything like that. He did all of his own work, and his main one was the 3 peaks in a domed house. Now, I don't know if you knew Jerry Favors or not. Did you know Jerry out of Columbus, Ohio?
No, I know who you're talking about, but no, I never talked to him.
Yeah, his whole business was he passed away 25 years ago, I believe. Yeah, about 25 years ago, and he was in Columbus, Ohio, and he was very good. He would be on the old CNBC, the old TFNN that we had in FNN, not TFNN, FNN in California with Bill Griffith. But Jerry was very, very good with that, but he never shared anyone. He never wrote a book or anything. His wife Leslie tried to keep the business up for a while, but she couldn't do what he did, and so it sort of fell apart. But he studied Lindsay to great length. He also was a good friend of Arch Crawford also. So, but what's good, if you hadn't have picked it up, it would have just disappeared like Gartley disappeared for many years. And some of these guys really had some great stuff.
Yeah. Speaking of 3 peaks in a domed house, our friend Jeff Hirsch at Stock Traders Almanac, he blogged the other day that he's seen a 3 peaks in a domed house pattern, and I was hoping to get my work on that finished before our talk this morning, but I think I'm through enough of it to say I think he's onto something.
Okay, stay with us. We got to pay a few bills here, and we'll be right back with you. Ed Carlson, Market Technicians Association.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're talking with Ed Carlson from Market Technicians Association out of Seattle. Ed, you were going to talk to us about the Three Peaks and the Domed House from Lindsay?
Oh, well, it appears that, let's see here, you had your Three Peaks back, Peak 1 in March of last year, Peak 2 in May, and you had a huge sell-off, of course, and then Peak 3 in November last year. And, just looking at that, you don't really, it doesn't look very typical until you realize that following Peak 3 last November, then you had the big sell-off that would be referred to as separating decline. Then you had the rally from February up to April of this year, followed by a 5-wave pullback. So that big rally is what we think of as the first floor wall, followed by the first floor roof, typical 5-wave pullback, and now we're into the second floor wall, which peaked, looks like it peaked on July 20th. And although Lindsay never made any mention of this, my own work on this pattern shows that we're now due for either a 3 or a 5-wave pullback, and I think we just completed the first wave of that yesterday.
Okay, now, when I was looking at your letter here, I see the price swings and things that you have lined up with Lindsay, and it's really interesting because you have a date coming in here right about now between the 25th and 28th of July.
Right.
Now, could that be a high, and could that be a high instead of a low?
No, that would probably be yesterday's low. I think. Wow. I'm pretty sure it said a low, right?
Yeah, that's looks pretty good. Yeah, that's correct. It looks very interesting that that could be very interesting because, boy, if it is, it could really explode out of here and move very, very quickly.
Well, now, I don't think so. I think we're in this 3 or 5 wave pullback that we see right before we get to the top of the cupola. Like I said, I've only done preliminary work on this so far, but I'm looking for, at this point, I would say it's either between August 11th and August 23rd, or out to August 30 to September 7th, which I think that's the more likely scenario. And I thought it was interesting to note that August 30 date is pretty much spot on with, you talk about a 90-day cycle in the Nasdaq. If I understand that correctly, you're looking for a high in the Nasdaq right about that same time. So I think things might be lining up about August 31st or first week of September for a very important high Dow.
Okay. We have a question for one of our listeners. Have you applied this to other markets, particularly the gold market?
I did a little preliminary work a couple of years ago on that, but two thoughts. Number one, Lindsay, he specifically wrote that his work was applied only to the Dow Jones, not even S&P.
Wow.
Or Nasdaq. Yeah, he said that you need something consistent, a constant index, something that's not changing constantly.
Mm-hmm.
And then, as far as other asset classes like gold, I'd be very interested in doing something like that. But you know what? In order to recreate all of everything he did, to have a good enough idea whether it works or not, it's a matter of years to do something.
Sure.
Like that.
We didn't start trading gold until 1972, and he was already,
He was on his way out.
Yeah, he was 80% toward the finish line, so that would
Right.
probably be. But boy, he was certainly good. I remember that very, very vividly. And then after I got to meet Arch, and Arch told me about, they used to go to a coffee shop and hang out together in New York back in the old days. It was really, really very interesting. But the man certainly was very good. Ed, why don't we spend a couple minutes here to tell the folks how they can reach you if they want to, purchase the books or take a look at your newsletter and stuff. Why don't you give?
Right. Well, thank you. Anyone would be welcome to come to the website. It's SeattleTechnicalAdvisors.com. SeattleTechnicalAdvisors.com. And like Larry said, we have all our books and DVDs available there, or you can take an annual subscription, or you can even take a trial subscription for just a month. And be delighted to hear from anyone. So come on by at SeattleTechnicalAdvisors.com.
Okay, that's very interesting. And is there? That's the best way to reach you is through email also?
Yeah, there's a contact us page there.
Okay, that's great. Well, what we'll do is we'll have you on here hopefully in maybe towards August sometime, and we will maybe take a look towards the end of August, and we'll see how these dates line up.
Right, that'd be great. Thanks,
Well,
Larry.
thank you for joining us. I appreciate it very much, Ed.
You betcha. Bye-bye.
You bet. Ed Carlson of the Market Technicians Association out of Seattle, Washington, on George Lindsay. The markets have opened, substantially higher, but not nearly as high as they were expected to be. We have still held some strong resistance. I wanted to show you in the middle of the night, something that, as I usually do, we were watching some of the things that make the markets go up and down with these different types of patterns. And we had one particular pattern that was showing up that was very interesting, and that was in the E-mini S&P. I wanted to bring this to your attention because if you like head and shoulders patterns, we had a really nice head and shoulders pattern last night where we took out the previous day's high by about a penny and a half. And that was a perfect symmetrical head and shoulders pattern, folks. If you look at this closely, between the 20th and the 24th, you'll see those lines, those pink-colored lines between the shoulder and the head. They're exactly equal. And not only that, what's good about this is your right shoulder, the one we made today, would tell us that we've made a little bit lower high, which also tells us that this could be it. So this could be bearish as long as you don't get above 2170. If you get above 2170, then that would be, something that would be wrong, and you'd have to step aside. Gold is moving pretty good this morning, which is relatively good. We thought that was going to go a little higher, as is silver, and our Treasury bonds still seem that we want to go a little bit higher, and then we will go from that level. So that's what we're looking at so far. The one other question someone asked is about the crude oil market. I nibbled at that crude oil once, and took a small loss in it. But the Canadian dollar is still acting very, very well. Remember that there's a very, very high correlation between the Canadian dollar and the crude oil. So we talked about this on Monday, and I'll put this chart up to show you again that the correlation between the crude oil and the Canadian dollar is very, very high, to the tune of about almost 70%. So if you are trading both of them, you should look at both of them, because in the Canadian dollar, of course, we had that beautiful 3 drive to a top pattern up at that 132 and change level. We got to 132.40. The actual number we were looking at was 132.35, and now we're 15 points or 50 points below that. So if you happen to do that trade, you'd certainly want to put your stop, at the break-even point, and watch it very closely. Now remember, when you're watching the Dow Jones today, 50 of the Dow points are related to Apple Computer, because that stock it's very heavily weighted in the Dow, because they're price weighted in the Dow. They're not cap weighted.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the Dow up 63 points. 50 of that is Apple. Keep a very close eye on Apple, folks, because as we use that as our first chart in the Tiger Den today, we are completing an ABCD Gartley pattern at the 61% retracement up here right at this 103.80 level. We're trading at 103.94 in the Apple right now, up about 8.5%. Gold is moving relatively well. It's up about $6 or $7 today, up about $10 from when we sent the recommendation on it. And of course, we're having a very, very good move in silver. It's up 40 cents. So all of that seems to be lining up relatively well here. Now, I will post the Apple chart into the room one more time because I think it's important because of the fact that the whole world is looking at Apple and they're watching the Dow Jones, and I think that's the wrong thing to do because the New York Stock Exchange Index is not even moving, in that direction at all. So keep in mind that that's something that I think is relatively important because we talked about this yesterday, that if the news was going to be good, excuse me, that Apple would get up near this 104 level, and that's exactly what's happened. And if you look at this closely, you can see the ABCD structure from May, through where we are right now. And if you look at the relationship to the last rally that we had between January and April, this was making a 78% of that ratio. So this is a really interesting time here for Apple. Above 105 and change, I'd have to say you got to get the old burro out into the desert and go out and take a break because you'll be flat out wrong if it gets above, say, 105.50 in the Apple. That's the way it would look like from this particular vantage point looking at technical analysis. Remember, the New York Stock Exchange Index, even though we've been here for 8 days, has not made a new high from July 14th as of yet. So, that's the main thing. So keep in mind, this is very, very important from a technical standpoint. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.